Good evening, guys, and welcome to this live workshop event taking place tonight. I just wanted to double check a few things, make sure people can hear me quite clearly. So it'd be great if you could just confirm that in the chat, if that's okay. You can hear me clearly this evening. And we're going to give it a few minutes just for a few people to come involved to make sure we can get a few more people in place in board. And so just relax and take yourself this evening, get ready, get a drink, and look forward hopefully this event this evening. It won't be just myself. We will be actually having our chief market analysis with us, but this will be an open discussion event. So feel free, guys, to please do obviously ask any questions in the chat, and we'll be getting around to them very, very shortly. But we'll just give it another minute or two, and we will sort of get this underway. Thank you, James, for confirming you can hear me. And this is a live event. So as I said, be a couple of more minutes, guys. And just for people coming on board, I know there's a few more people now. As I said, this will be an open discussion event, as well as a technical breakdown event of some of the markets this week with our chief market analyst, Willie Kamani. So just a few more minutes and we will get this underway. Perfect. Okay, guys, I think we're going to start now. So welcome, everyone. My name is Jack, and welcome to XTB's live workshop. This is actually our third live workshop now, and you can catch us at the same time every week around this time. And as I said, I think I may have mentioned this earlier on with some of you who've already been here for a while, but we are going to be myself as well as our chief market analyst, Willie Kamani, who will be joining us. Willie, are you there? No problems at all. Well, guys, so tonight this is going to be an open discussion event. So as I said already, please feel free to get ready with a couple of questions that you may like to ask myself about the platform or any technical advice as well on the charts that you've been looking into this week, maybe, which again, Willie will be going over through very, very shortly. But really just wanted to just find out, obviously, this evening, Willie, what we're going to be going over tonight, can I ask?
Okay, is the audio working now in the chat? Okay, perfect. So sorry for that, some technical issues. I'll restart again. Thank you very much for having me today. My name is Willie Kudmani, market analyst for XTB, and it's always a pleasure being at these events, being able to participate and share my insight and respond to your questions if you have any. As Jack mentioned, we will be taking them regarding anything we discuss today or the markets that might interest you. So what we're going to be talking about from my end, we did have some key markets moving with some moves in oil. We have some moves in the oil market that we can take a look at with some news following the OPEC meeting that some of you may have heard of. We also have some news with the US 100, NASDAQ reaching new all-time highs with indices on that end, which we'll take a look. And we will also take a look at the dollar, which has been moving a lot lately with the Fed decision, central banks. We had a few today, and as well as the the inflation figures that showed higher than expected inflation yesterday. So, and of course, if anything else interests you, please feel free to ask. You as well, Jack, if anything interests you. So thank you very much for having me on once again, now that everything has been resolved technically. So
Yes, sir.
I'd say let's start with taking a look at a chart of, let's start with oil, because I feel like that's what we've been seeing today lately. Unexpected drop in inventories today. So so you can see that on the news section of the xStation, more than expected. And we saw some moves in oil as well today with that. So on this chart, you can see basically this is an overlaid chart of oil with oil WTI, so Brent and WTI, which had been moving higher actually, with Brent reaching 76.65. But as some of you may know, there has been a lot of news lately after OPEC failed to reach an agreement in their latest meeting, where the real issues were between Saudi Arabia and the Emirates. Apparently, news has confirmed that, or news has emerged rather, that there has been an agreement reached between the two countries, and that has been helping as well with the pressure on oil prices. So the potential pressure on oil prices, obviously, if there was no production increase, could have been a potential upward pressure, but with the increase in demand, of course. But there was also a side theory that, because they weren't able to reach an agreement, OPEC would just fall apart. That didn't happen. Of course, they did end up reaching an agreement potentially. So it's going to be interesting to see. On the technical level, we see the price actually testing the lower limit of the Ichimoku cloud, which is an indicator that I find quite useful, as well as this purple line you can see here, which is the 100 SMA. Down today slightly, as I said, about 2.6%. So trading around this area. It's going to be interesting to see whether it can break through this, or whether this will act as a support once again. As you can see, it had acted in the past. Just briefly, we'll go over WTI as well, just on the price, but similar situation, except on the H1, it actually just managed to break below the Ichimoku cloud and trading at 73.20. But if we go on the daily chart, you can see how far we've come from just a few months ago, the middle of May. We're still up on WTI. The price is still up over 19%. So reaching obviously a high of about 20%. So that's the first market I'd like to talk about, or I wanted to talk about. The next thing I wanted to talk about was the NASDAQ. So that is the US 100 tech index. We can see here, NASDAQ once again testing all-time highs with a potential double top here, but we have to wait. This is a potential neckline, I would say. And at the same time, on a technical level, we can see that while certain other indices have been struggling lately, the NASDAQ Tech Index has been one of the ones that has been benefiting. Very interesting, actually, worth keeping an eye on this week is earnings season in the US. So if you're following, this week starts with the big banks. Some of the major ones I'm sure some of you may know. So worth keeping an eye on the earnings season for the US Wall Street this week and in the coming weeks, but particular this week and the next few weeks as well will be very, very important. At the moment, though, as I mentioned, not quite being able to reach 15,000 points on the NASDAQ, but just shy of that and then pulling back. Still around the 50 SMA and still in this roughly this sideways trading range that we saw in the past, with this area acting as a potential support. We can even raise it up a little bit higher with a low around 14,830. So again, upward move on the index, the tech index, I would say. But at the same time, very interesting to keep an eye on the earnings season. So that's why we're tying the technical analysis into the fundamental news. It's always worth keeping an eye on both. Very briefly, we'll go for US 500, which similar situation, but not quite able to also continue the upward move. So the S&P, same story. Of course, tech stocks are slightly different than the S&P stocks, but if some of you have watched several videos on this channel, you've seen that the index in itself, both the NASDAQ and the S&P, are mainly weighted towards big companies. So they are the ones that tend to carry the weight of the index mostly anyways. And then finally, which will play into each other, I would say, is the dollar. So let's take a look at the US dollar index. US dollar index, which is today pulling back slightly once again. We saw it rise yesterday after the inflation data that helped the dollar. But at the same time, let's take a look. Still trading way higher than this previous range, just below 90.6. And reaching almost the highest level since March at the moment. So you can see trading at the highest levels since March and April on the USD index. How does that correlate? I would say we can take a look at gold with an overlaid chart of USD index. So gold moving above this upper limit, which acted as a resistance a couple times. And if we put the overlay of the USD index, we can see USD index dropping, gold price moving higher. Of course, it's not an exact correlation, but it is interesting to keep an eye on how these movements tend to be somewhat symmetrical sometimes, as you can see in these instances. Even more symmetrical, I would say, is the relationship between the US dollar index and Euro USD, which has managed to return above 118, now at 118.3. So this was a very important support that was broken, tested several times, but the index or the pair managed to return. Just approaching the 200 SMA, which it broke below recently, but still hovering around this. Pound USD, similar situation, pulling back as the USD attempts to recover again. And if we look at the market analysis section on the heat map, USD actually turning into one of the worst currencies heading into the second part of the week today, while Euro is actually benefiting a little bit more, while the pound is actually also pulling back. So those are the general overviews of markets that I really wanted to cover. Some of the major moves, as I said, the earnings season in Wall Street, as well as the OPEC meeting news and the production, and all of these, and the central bank decisions that we've seen this week with the Bank of Canada today and the Bank of Turkey, Central Bank of Turkey, both announcing their rate decisions and leaving them as they were. So that's my overview for the moment. So if you have any questions,
Fantastic, Will. Thank you for sharing such great analysis there. I did actually have a question. Yeah, guys, I just wanted to let you know this is a sort of open topic discussion event. So please feel free to ask any questions that you may have for myself or for Willard, if it's anything to do with the platform. But Willard, I wanted just to ask, obviously, I noticed obviously you've got a lot of indicators on your analysis. But would you say, obviously, there's sometimes the recommendation for the amount of sort of indicators you would use at one time, which could you say, or with how that may?
Sorry, continue your question. I think it's a very interesting question, actually.
Yeah, I was going to say, obviously, I noticed that you've got obviously the Ichimoku cloud. It looks like you've got a moving average line there. And just really want to see how many indicators would you say to obviously help you on your decisions or decisions of making a judgment call on a market going in a certain way, may I ask?
Excellent question. Okay, so I think it's very subjective. I would say, based on my experience and the experience of many professional traders I've talked to, is the advice is to not overcomplicate it. So the basic of trading is still price action for most people, I would say. So what the candles do, the indicators can help you, give you a guideline, give you maybe confirmations. They can be the, I would say, the cherry on top. So they're not what does the work for you in analysis. They are definitely something that can help. But I would say spotting general trends in markets is the key thing. So then, how do you decide what indicators you want? I would say it really is personal preference. I like on gold and commodities, the Ichimoku cloud, just because visually speaking, I like the way it interprets for me. So if the price is above, generally, you know, the trend is upwards. If the price is below significantly and the trend is downwards, of course, that's not, you know, that's not a rule set in stone, but that's just the way that if the trend is going downwards and the Ichimoku cloud is below and the price is below the moving average, so it starts to become a certain boxes to tick with indicators. So like there are certain criteria that need to be met for whatever trade you're doing, whether it's short or long. And if those criteria are met, and the more indicators you have, the more criteria need to be met. So you can have the RSI, which is very popular for an overbought, oversold outlook. I like to have that. I like to have moving averages are the most simple ones. They tend to help you spot some more common supports and potential resistances, which at the end of the day, the goal of indicators and of the charts is really to narrow down a time frame and a scope of where you're trading and execute it as best as you can. So if we were to start a new chart, for example, on, let's say, euro dollar, I would just, let's say we take off everything and even the lines. And so this is the basic naked chart that we would see, let's say. And even like this, it's not that bad. You can still trade like this. But let's say, so what I would first do is not even indicators. I would just visually set potential supports and resistances at lows and highs. So now that we have narrowed down our range, then we can start playing with that. And you can make the range as big as small as you want, wherever you see it. It's very subjective. Then let's say I want to wait for this, or I want a confirmation that this might be a support. So maybe I put on a simple moving average, 50 period, and it tells me that maybe this is a potential resistance. Or let's say I want to put a shorter time frame exponential moving average, which tends to be a little bit more interesting. And you can see that again, lower limit. So it's an addition to your own method, I would say, and the more you feel comfortable, don't overdo it with the indicators. Just they should help you, not hinder your progress and not confuse you further. So it really should be about visually explaining or helping you kind of decide certain things, and as well as criteria and parameters to meet for a trade, I would say.
Fantastic. Yeah, I was going to say, obviously, guys, we do have a fantastic situation on the platform called our news tab, which Willie could sort of maybe just click on. Obviously, that kind of, if you haven't got too much time or you're unsure of what instruments may be good for indication, it's a great way to get some trade ideas if you haven't got too much time, or even if you have, there's plenty of information in there really to keep on top of the markets before making a decision.
Yes, of course. And we also have, of course, recommendations from banks. So JP Morgan, Morgan Stanley. And although they don't explain why they say to do certain things, you might look at their charts and see for yourself, apply what you've learned. Really, this is about, that's why we have the education section with all the courses to help you make the most informed decision possible. That's why we have these events, even with partners. They're really here to share their knowledge and make you into a trader that can be self-reliant, and that's what we're trying to do here as well. So the news section is also provided with all the news that you might need for the events happening in the markets, and the calendar is something that every trader should use, in the sense that it helps you with the events coming up as well. Tomorrow we have, or actually today we had the Fed Chairman Powell testifying. We can see tomorrow what we have. Again, Fed Chairman Powell testifying, some CPI data, average jobless claims from the UK. So tomorrow we could have some pound movement, UK index movement, because we have some macro data coming from the UK. We can see all of that from inside the platform. So very useful information all around, and at the end of the day, so you can make the most informed decisions.
Perfect. Well, I think we do have a couple of questions, so I think I will fire away with a couple more already, if that's okay with you.
Yeah, please go. I'm happy.
So we've got UA, who has asked, thank you very much for your question. Can you explain how inflation appreciated the dollar? That is one of the questions that we've had.
Can you repeat that question? Sorry.
Yeah, can you explain how the inflation appreciated the dollar?
Okay, so there's a few things. It's not that in a sense inflation appreciated the dollar. It's more that the rising inflation carries expectations of a change in monetary policy from the bank that then would appreciate the dollar. So in essence, what is inflation? Inflation is the decrease of value of your currency. That can happen for several reasons, but in this moment, because of the pandemic, really the main reason has been excessive printing, or unlimited printing of money from the Federal Reserve and any central bank, really. But so you would expect that the more money is printed, the less each dollar is worth. So inflation, we saw that the rise in prices isn't necessarily correlated to just the rise in prices in itself. It also means that $100 today can buy you something, $100 in a year can buy you less things. So that's really what it is measuring at the same time. So how do you resolve that? Resolve that by the fiscal policy and monetary policy of the central bank. So why is it going up? Because in essence, if markets, the Federal Reserve has been saying that, you need a little bit of backstory for this one, but the Federal Reserve has been saying that the inflation issues that have been arising, where inflation is rising at record levels, has been transitory. So it's been, according to them, it's going to be something that passes automatically. Now, every time inflation data comes out that is not supporting of that narrative, so in fact, inflation is still increasing, that puts extra pressure on the central bank from, let's say, other banks, institutions, expectations, the markets in general. It puts pressure on them to then act so that then the US dollar doesn't depreciate too much. Just the expectation in itself can then have an impact on the dollar. So before they even take any action, it can have an impact. And you can see that in reverse, where when the Fed members and actually chairman, or not chair, the Treasury chairman, Janet Yellen, she said that they had to consider tapering of the quantitative easing. Just her mentioning that, and she's not even from the Fed, saw a huge drop in markets, especially stock markets, and a rise in the US dollar, which then also saw a drop in gold. So at the same time, it's sometimes important to follow even more than ever nowadays the speeches of central bankers, because not just their decisions have actions, but also their potential decisions. And I think that's what's playing out right now.
Fantastic. Thanks for sort
Oh,
of highlighting that answer. Really great answer there, Willard.
thank you.
I hope that helped you, Louis. Obviously, we have another question actually from Ian. Given, say, the visualization of 9 charts at once on the platform, what set would you pick for the most visual to represent the bigger of the markets?
Okay. I like. You can do, the nice thing about the xStation is that you can actually do the 9 charts represented. You can do them for every category you set. So you can set additional categories and then set charts in that category. So I have, for example, as you can see, I have one for commodities, which has all my commodities in there, which is, I would say, oil, gold, cotton, silver, platinum. You can see them all at the same time. Indices.
I think it does come down to personal preference to that question, Ian. I mean, you can have them horizontally, you can have them sort of grid view.
Yeah, so you can have them really, but you can even categorize them, as I said, and then you can have all your effects showing at the same time. Or then I have an overview one where I just have a bit of everything. I have a few currencies, a few indices, as you can see, a few commodities, and I like to have them all at the same time. So it really is personal preference, but you can categorize them if you want through the xStation. It does allow you to do that. So I find that very useful, actually.
Perfect. And again, if you can see them all at once, like all the commodities going up or down, you can kind of get a better visualization of the markets and why that is happening.
Exactly. Especially if you see everything going down but one thing, or like, when everything is moving in a certain, or most things are moving in certain directions, if you have them all on the screen at once, you can see the differences, which can be very amusing.
Yeah, perfect. I wanted just to let you know, guys, we do also have an education section on the platform. Is that something we could just have a quick look at?
Yeah, of course.
Fantastic. Well, in this section, we have a number of different different options in terms of actually, if you want to learn a bit more deeper pricing strategies, understand which of the indicators are used on the platform and an in-depth knowledge about them. We have things that go over Fibonacci. Again, we have breakouts, false breakouts. It's really cool features on there. That I think, again, we have a question that's actually come up asking from James. James, thank you very much. What would be a decent percentage return on capital per month starting Forex trading? I think it could be a very difficult question to answer, I would say. What do you think?
I agree. I mean, it's not something that can be answered in the sense that obviously you don't want to be losing money. That would be the start. But at the same time, if your capital is, if you have £1 million, 1% is enough. If you have £500, the percentage might have to change. So it really is subjective. I would say the most important thing with the return is a good risk management strategy. Don't expect to win every trade. That's not how it works most of the time. But at the same time, that doesn't mean you can't be profitable while losing trades as well. So we have a very interesting and important lesson on the trading academy of the xStation, or of the website, where you can see the risk management situation of that. So if you start with the same amount of money, 2 traders, both of them with 50% success rate, so you win half your trades, you lose half your trades, and with the right risk management, which isn't even that complex, you can actually end, let's say after a month with 10 trades, you can end positively rather than ending negatively. So study your risk management, study your standards and your objectives, and also be realistic with your expectations. I would say don't expect to turn £10 into £1 million the next day. Unlikely. I don't know if it's impossible, but this is a sustained game usually. Trading is. So
yeah, I would totally agree with it. I would say you have to have a realistic expectation. So like you said, the more capital you have to start with, to someone starting with a smaller capital, if you're risking the same amount as a percentage, then one, you are keeping risk management in check. And that's why we do iterate here through every account manager to our clients. Risk management is a key thing for survival in this industry, and obviously to keep you going on the right track. So we do have a great educational video on what Willie was just saying there about the two different traders and how one does with the right risk management does a lot better than of the person obviously unfortunately not having risk management in place. So please feel free to take a look at that in the section there.
Sure.
And Willie, I just thought we've got a couple more questions, I believe, in this chat here. So
yeah, I'm happy to answer. So thank you again for asking any questions. Don't feel, don't ask as many as you want. Even if you're the same person, feel free to ask the questions. I'm more than happy to answer them. If you're enjoying this video, feel free to leave a like. As always, subscribe to the channel for more of this content, I would say. But yeah, feel free to keep the questions coming, Jack, as well. I'm really enjoying this discussion with you.
Yeah, fantastic. I thought one of the key features that a lot of people may not know on the platform, guys, is that as you can see on the left-hand side, the market watch, we have a part there called the market segment right next to hot, Willard. And I think if you can just click on that, it's a really great way to understand, to get an idea of the certain instrument that you may be looking to trade, what people are actually thinking, whether they're more sell biased or buy biased. Are we able to have a little look at that, Willard?
Yeah, we can, absolutely. So, but this can be actually done for any instrument you can choose. So any instrument you want, you can, if you ever open the chart for that instrument, let's say, even if it's, so on this side, you can see the sentiment, as you mentioned, as Jack was mentioning, with buyers, if that's your preference, you can see that most people are buying on Ripple, Ethereum, Bitcoin Cash, Platinum, Coco, and so on and so forth. At the same time, you can also see that with any sort of market you pick. So if I go into a full screen market, let's say on gold, new order, let's see, performance, you can see that, actually, where was it? Oh, yeah, exactly. So you can see that at any point for any market you want, the performance in the last, the price change and the pips as well. So that you can see, as well as the sentiment for every market you can see as well. There's a lot of actual important information, I would say, in the instruments, not only that, but on this side. So you can personalize the market watch, which shows you different things. So if we want to see the sellers, we can just click on that and it'll show us the highest percentage of sellers on markets for us. So it'd be Euro, Tri, so Turkish Lira, as well as Natgas is heavy on sell, and a few others. You can see even US 500. So the sentiment actually can be very useful to you whenever you're deciding what trades to open.
Yeah, it's a perfect tool, guys, to use. Again, as I said, I think with that combination as well as the news tab, again, if you haven't got much time with your day, or if you have got even a lot of time to read, there's so many articles that we if you're someone who likes actually trading news, obviously it's important to keep an eye on the calendar. But again, even if you're not trading news and you want to trade after it, I think that news tab, as well as obviously the sentiment of understanding the market direction, can really help gauge an understanding of people's performance or an instrument's performance overall. We do have a question asked, obviously, for Willie. What is the best time frame to use in terms of trading?
Excellent question. As always, I would say that, again, goes back to time preference or time. I would say it's subjective again. Most things with trading would be subjective, but with this case, so if you can't afford to, keep a constant eye on your trades, then shorter time frames will be trickier to have, because let's say you only have time during the day to open a trade in the morning, then you go in for work, and then you can only check in the evening or check in the afternoon. Then a shorter time frame might be useful to open the trade, but to execute might be a little bit tricky, because the moves can be so sudden that it can stop you out if you have some sort of a stop loss, which you probably should. So but the thing is, when it comes to analysis, I think that they're all very important. So I would have a few time frames. So I would have, and we actually mentioned this in the first episode we did. So I would say understand first of all that time frames are fractal. So it means that they're just expanding. So It's basically what the 1 hour candles we see now are just 4 15-minute candles put together, which are 15 1-minute candles and so on like that. So it's the same market, it's the same price, but the movements can look slightly different. Shorter term can help you in, identify turns in the market perhaps a little bit faster, but the overall direction will generally be seen clearer by longer time frames. So if you're trading, of course, on a longer time frame, then you're going to be using daily or 4 hours, let's say, to trade on several days. If you want to open a trade, let's say several days, because sometimes, you know, moves don't happen overnight or moves don't happen immediately. So you might be opening a trade maybe here and hoping for it to get to here, but it might take a few days. So you open the daily chart, you see where is the general trend heading on the daily. Then you can go on the hourly, decide where do I want to open the trade. So now I know, let's say this is hypothetical where the trend is going up. I assume that it's going up. Now I zoom in onto the time frame and pick my entry, and I pick my stop loss and take profit based on my strategy, based on my risk management, and based on the fact that, going back to the indicators, let's say my indicator criteria is met, so a certain moving average might be exceeded, or one way or the other, or something like that. So there's really several ways you can go about using several time frames, but I would say, generally speaking, the longer time frames give you the longer idea of the trend. The shorter time frames can be more useful to execute trades. But if you're a very busy person, or if you're too stressed to keep checking your trades and you just want to open a trade, every once in a while or every day, then the shorter time frames can help you identify when to go in. But for longer term, maybe even the longer ones might be more useful to you. So it's subjective, for long answer, but it's subjective for good reason, I would say.
Well, thank you very much for answering that question. I would just reiterate a little bit on that. Just say, obviously, everyone is different from every trader out there. It could obviously depend on your job. Some people maybe have sort of different ways of looking at the market. Like you say, if you haven't got too much time in obviously your day, then you're definitely going to be someone who's maybe looking at the monthly, weekly, and daily trade of the daily time frame, because some moves you don't always have to be keeping an eye on the market every day of the week. Where if you're someone who's more of a scalper or an intraday trader, you may be taking actually a few more trades than what we'd call swing traders. And again, obviously, there's some people that would be looking to ideally probably be in out of the markets in a few hours or to an hour if they're scalping. And again, through the educational section, obviously for our account holders, we do have in the platform topics that go and cover all these different scenarios, whether you're swing or scalping, and how obviously it is trial and error, which is something that you'd have to get and understand. Each person is different, but hopefully eventually you'll get to understand what suits you better and your lifestyle at the end of the day.
Perfectly said.
Perfect. We do have another one from Kevin. So Kevin, I'm coming back to your question.
Yeah, please.
The sentiment, is it just for XTB users and not the wider market? That is correct.
Yes.
This is just for XTB users only, Kevin. So I hope that answers your question.
But there are a lot of XTB users, so take that with whatever importance that may have. So.
And Ian, Ian has said it is true for a short time trade. Is it true that short time traders get high returns basically because they are needing to work it and spend their time? This is my experience so far. Sorry, that was Ian. So Ian, well, thank you very much for the question. In terms of that question, is it true that short-time traders get, as I said, I think short-term time traders are people that, well, I said, you'll be taking more trades at the end of the day. I think if you have risk management in place, then yes, you could be having more profits. You can't really determine your profits, obviously, because the market is not guaranteed. But as long as you have risk management and you have a strategy in place where you're getting a good return on your strategy, then you may be obviously having higher returns, I would say. Do you agree with it?
I would agree with that. I would say that as there is more chance for higher success, there is also a chance for higher failure, because just the quantity of trades you're doing. So if you have a successful, let's say, rate of winning trades, then probably you can scale it. But keep in mind that the more trading you do, sometimes one of the worst things that you can do is force a trade just because you feel like you have to, and then either the market doesn't move that much or it moves against you. So yeah, I mean, it's tricky because you can make, let's say you can open bigger lot positions that are longer term, make more money if they go your way, but at the same time, if they go the wrong way, then you're wasted. So it's really a pros and cons. None of them is a guaranteed way to make more money. But if you are an expert trader, of course, the better you are at something, the more you can do it, the more, the more successful you'll be. But again, you're increasing your risk, of course, because like Jack said, it's never guaranteed. So you could be right, 30 times, but then things could change. So
yeah, I think you're correct on that. We have asked, Ian actually has asked, is oil tanking right now? Is oil something that we could have a look at?
Yeah, we took let's take a look at oil. Actually, interesting move. When we started speaking, it was actually testing the lower limit of the Ichimoku cloud, the moment breaking through it, testing this lower area, so a potential support, I would say. But really keep an eye out for the fundamental news that we saw. So this is interesting because we just received, and you can see this on the news section, U.S. Crude oil inventories decrease more than expected. So you would expect that by the rules of supply and demand, price generally increases, but we are seeing actually a decrease of price because at the same time, we also had this news, which is oil price swings on OPEC deal rumors, which I mentioned at the beginning. So it's difficult to determine where the price is going because on one end, we have drop in supply with a potential increase in demand. At the same time, we also have potential increase in supply coming if the deal is reached. So I would say we're at an interesting technical level. Hard to say. This has acted as a support in the past, but we have seen the price be moved by fundamental news in the past as well. So definitely keeping an eye on this instrument. As I said, as we spoke, actually broke through the levels we mentioned, testing this, but pulling back, as you can see, not breaking through it consistently for the moment. WTI though, let's take a look at that as well. So on the daily, you can see that the upward trend has slowed down after reaching $77, pulling back all the way to 71 actually, and then now moving back up. So the daily candle on today, you can see is actually quite significant, about 4% or almost 4% on oil WTI. But these have been, you can see that the candles have been quite big lately. So it doesn't guarantee anything. We see the downward move and we wait to see where it's testing and whether the levels that it acted as a support in the past will still hold.
Perfect. Weird. I was just going to ask a question that I had actually.
Please.
What is your thoughts on obviously overlaying charts? Obviously, I know you had the WTI and oil connected. Is that something you do quite a lot? And
I like it a lot.
To just show our users how that is done on the platform, is it okay just to go through that?
Absolutely, absolutely. So to answer your first question, I don't use it. I'd use it, let's say 30% of my charts. So and I use it in specific instances. So let's say oil and oil WTI, they're both very similar instruments. They're both, very similar price movements. They're not exactly identical. In fact, there's a spread between them, but I like to see if there is a divergence between them, then I can go in and investigate. So if they're both moving at the same time, doing the same things, usually I won't look twice. I'll go and take a look maybe at the other chart for specifics. But when it comes to charts, for example, like gold and euro, or gold and the US dollar index, or euro USD and the US dollar index, those help me in particular understand if something is primarily caused by a movement of the main currency, which in this case would be the dollar, as gold and commodities are quoted in dollars, and in this, it's the second currency pair, or if it's mainly based on the strength of the instrument itself. So gold sometimes goes up because of an increase of investment. We saw that with the crypto crash recently. We saw that when sometimes the stock market crashes, we see an increase in gold. So it doesn't necessarily have to do with the dollar in particular. But so let's say on Euro USD, and I'm seeing the euro go up, and I want to see if, in my opinion, of course, the euro is performing well, but what is the US dollar doing in comparison? So I can just go to the left side of my screen here on the chart, the third one from the bottom, compare charts, and I type the chart that I want. I like US dollar index, so it's USD IDX. I can see that US dollar index pulling back as Euro USD pushing higher. And does this really give me confirmation of anything, but not really. But it does help me understand sometimes if something is primarily motivated from the strength of the dollar or the weakness of the euro. So you can see actually how would I read that right now? So let's see. You can see that the US dollar index, which are these blue candles, are moving sideways and slightly down, while the euro USD is moving slightly up. If we want to take a look at the market analysis section, we can see US dollar trading lower, euro USD trading higher against most currencies, especially majors. So it does play out into that. So I use them as comparisons. So for oil, to see if there's differences between them. I use them for correlations with gold and currency pairs, generally speaking. And you can use them very easily. You can even actually, another one I do is gold and other precious metals. I like to do that. So let's take away the Ichimoku cloud. Let's take away some noise from the screen. I like to have, you can even have more than two. So let's say I want to have gold, silver, platinum, and palladium. So all precious metals. Now it looks like a disaster, but you know, if you actually separate them and kind of make it your own way, you can then end up seeing, let's say, that one is outperforming the other ones massively. Then you can have them individually open up on something else. You can even have the US dollar index on top of it. Very interesting to see, because we've talked about these other precious metals, so there could be different aspects impacting them. But at the same time, it's just a tool that allows you to either compare, I would say, between, or see correlations or potential correlations. And that's the way I use it most of the time.
Well, thank you very much for answering my question there. I think it's great. And I think everyone here, hopefully that has helped in giving you some ways how you can use other instruments to compare against each other before obviously making any decisions. But yeah, I think we are coming to the end of the session, guys. Thank you for all your questions this evening. And obviously thank you, Willard, for being here.
My pleasure.
I just wanted to let you know, just reiterate that we are going to be here every Wednesday at this sort of same exact time. And hopefully, obviously, I thank you very much for someone putting in, they like the commentary. So if you like this style, before I wanted to go, I want to let you know, if you really like Willard's information about obviously the markets, he has his own WhatsApp group. This is designed for fundamental news, technical analysis like this, and he does a weekly webinars again with ourselves and just by himself. If you are interested in getting into this WhatsApp group, please do reach out to your account managers, and they'll be happy to help. And I'm sure Willard will be very happy to have more people on board. Again, thank you very much for all your time, and enjoy the rest of your evening, everyone.
Yeah, thank you very much, everybody. Enjoy the rest of your evening. Thank you for having me. As you mentioned, I'll see you at the next one. Thank you.
Take care.